On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Hi team, I know I said I wouldn't record an episode today, but I couldn't help myself because there's so much going on this coming week, and I wanted to talk to you about what you need to keep an eye on for the week ahead. I'm actually recording this in advance on Friday, still heading away for the long weekend as planned, so I'm not going to talk about the week that was because that week is still in progress. So I'm going to jump straight into what we need to watch out for in this coming week. Let's start with the US, and it's a very busy week on the US economic front. We've also got some big corporate releases that are coming out, so I'll touch on those right at the end. But in terms of economic releases, PCE inflation for September will be in focus. Personal consumption expenditures, that stands for. This is the Federal Reserve's preferred inflation measure, which is why it's really important. It's out on Thursday night, and we're expecting to see further progress on the inflation front. On a monthly basis, there might be a bit of an uptick, but in terms of the annual inflation rates, headline PCE inflation expected to come down to 2.1%. That's the lowest since February of 2021. And the core PCE inflation rate is expected to be tracking at 2.6%. That's sort of where it's been for the last 4 or 5 months. So you have got that headline inflation rate that's come right down to almost be bang on Fed targets, but core inflation still stuck a little bit higher, a little bit closer to 3% than 2%. A day later, so overnight on Friday in the US, we'll get the ISM manufacturing index for October and the monthly jobs report for October. And the ISM index has been below that break-even 50 level for 22 out of the past 23 months. So for the best part of 2 years, it has pointed to contraction. It's likely to remain soft in this week's figures. The better news is that the services sector, which these days it's a much bigger part of the US economy, the services ISM has been a lot stronger. We won't get that corresponding report for October until next week, but I'd expect it to look a lot better than what the manufacturing index looks like on Friday night. The jobs report probably be more important because the labour market is a really important piece of the puzzle for the Federal Reserve and for the path of the economy. This is out on Friday, also covers the month of October. The labour market has been a little bit more solid of late, and last month we did see the number of new jobs created at the highest level since March, and the unemployment rate came down a little bit to 4.1. It rose as high as 4.3% a few months back. Now it's back at 4.1. At 4.1, we're still above those 2023 lows when unemployment got as low as 3.4%. That was the lowest since the 1960s, probably artificially low because of all the COVID disruption, to be honest. At 4.1, we're higher than that, obviously, but we're still lower than history. So 4.1 is not too bad. We do need to see the labour market remain quite solid if we're to achieve that soft landing in the United States. So that will be very closely watched on Friday night. Here in New Zealand, obviously a holiday shortened week with the holiday on Monday, so the markets will be closed and it'll be pretty quiet, just a 4-day week for financial markets in this part of the world. The highlight for me will be the ANZ Business Survey for October. This is out at 1 o'clock on Thursday. It's been very strong of late. We've seen both the headline confidence measure and the own activity index, which correlates very well with economic growth. Both of those have risen to the highest level in 10 years. So we're watching to see if that optimism is sustained. We'll be watching for any change in terms of the various industries, construction versus retail versus agriculture and so forth. and we'll be watching for any further evidence of pricing pressures softening. I know we've seen inflation rates come down, we've seen a couple of OCR cuts now, there's more to come, but this survey has just had a few indicators that suggest there are still some high pricing pressures out there, so that is something to watch. China will be in focus late in the week. We'll get the official PMIs from China on Thursday afternoon, 2:30. So you'll get one from the manufacturing sector, one from the services sector, and also a private sector manufacturing PMI will be out a day later on Friday afternoon. The Chinese economy has obviously had a pretty difficult year. Last year was difficult as well. This year's also been quite challenging. But we've seen some stimulus lately, and it'll be interesting to keep an eye on whether that has had any impact on activity across the manufacturing sector or the services sector. So will we see a bump in these PMIs as a result of that stimulus that's happened of late, or that we've seen evidence of late? Across the Tasman, there's some key data coming out on Wednesday, the quarterly inflation report. This is out just after lunch, 1:30 p.m. on Wednesday. This will be really important because inflation has been stubbornly high across the Tasman, and that's why the Reserve Bank of Australia, the RBA, has been sitting tight while most other central banks are cutting interest rates. So 3 months prior, in the June quarter, the headline inflation rate in Australia was running at 3.8% per annum. Remember, we're down at 2.2 now. And the trimmed mean CPI, which is what the RBA focuses on, that was a little higher again at 3.9%. So we need to see those numbers come down quite a bit for the RBA to feel comfortable enough to start cutting interest rates. And at the moment, financial markets don't see a rate cut in Australia until February next year at the earliest, and that puts them well behind their peers. In the US, interest rates are already coming down, same in the UK, same in Europe, and same here in New Zealand in terms of our OCR. But the RBA not expected to cut its policy rate until next year sometime. So this inflation report will be very much in focus. Last but certainly not least, the international reporting season will continue, and we'll hear from a range of companies this week, most notably some of the tech heavyweights. Tuesday, we'll hear from Alphabet, which is the owner of Google. On Wednesday, we'll hear from Microsoft and Meta, that's Facebook. And then on Thursday, we will hear from Amazon and Apple. So 3 really big days in a row. Those are all US times. So it'll be Wednesday morning, Thursday morning, Friday morning that they're all released in terms of New Zealand times. This will be very, very interesting to watch because there has been a notable change of market leadership in the US over the last few months. The tech and communication services sectors, which is where a lot of those high growth tech heavyweights reside, except for Amazon, that's considered to be consumer discretionary. But tech and communication services both peaked in early July, and since then those two sectors are down about 3% from those levels. Meanwhile, the overall US market has carried on going up, but it's been driven by some of the other sectors out there. Utilities are up 20% since then, real estate and financials both about 15% higher, industrial's been up about 10% over that period. So it has been a pretty interesting time in the US market, and it'll be very useful for us to just get a sense of how some of those big tech companies are tracking in terms of their earnings and the outlook. It won't all be about tech. There's lots of other important companies reporting results next week. Caterpillar, Ecolab, McDonald's, Visa, Martin Marietta, MasterCard, ExxonMobil, so there very much will be something for everyone. A few AGMs to watch across New Zealand and Australia. Here in New Zealand, Heartland, SkyCity, Spark. Across the Tasman, CSL, BHP Group, Wesfarmers, also a couple of quarterly results across the Tasman, Woolworths and Amcor. So there you go, that's how the week is shaping up. Thanks for listening as always. The other event that is nearly upon us is the US election. It's only about 10 days away. I definitely have some thoughts there about what to expect, what we need to keep an eye on, and how financial markets might react to the outcome. So I have got something in mind over the next few days to just give you an update on the US election. So keep an eye out for that one. But for now, enjoy the long weekend, enjoy the holiday shortened week, and we'll talk again soon. Thanks for listening.
For more insights, visit craigsip.com.